2, 1. And hello, everyone. Welcome to the Real Estate Show on KCMX News Media 880. Pete Belcastro and Alice Lema with you today in the house here at KCMX as we're in that lull time between Christmas and New Year's. And welcome to the Real Estate Show today. Alice, my goodness, it's like, well, first of all, Christmas is over. New Year's is 2020 is almost here. My goodness.
Yep. Did you have a good holiday? How was yours?
I really did. It was fun to be with my son for the first time in a long time.
Yay.
So that was all fun, and on we go, as we get ready for 2020. I can't believe it. This past year, we were talking earlier about 2019, this year, and just how different things were a year ago.
Oh, so different.
Going
completely.
into 2019.
And our predictions were different, too, and then it didn't turn out to be what we thought.
Well, one of those predictions was about interest rates.
Right.
And so today here on the Real Estate Show, Guy Giles is standing by from Mutual of Omaha Mortgage. We're going to talk to Guy about those interest rates, because certainly in 2019, don't you think they were the real driving force behind what is turning out to be almost a $4 billion in sales in Southern Oregon?
Oh, absolutely. And I think it also gave us a stronger head start in the first quarter of 2019, because the interest rates were actually over 5% for a split second there, and people were panicking because it really made a big difference, especially to our local community.
Yeah.
It made a big difference of what their payment was going to be.
Those rates also came down enough to where people started to refinance again, and so they seem to be the driving force. So we're going to hear from Guy in a little bit about what he thinks is going to happen in 2020.
I can't wait to hear what he says.
Because if it's like 2019, we're in for another one of those. There's just so much demand out there, it seems to me, that as long as interest rates remain where they are in this range, people are going to buy right now.
Well, and it's interesting because we were just talking before the show that there's actually a 4% increase in buyer activity from November to November. There's 4% more buyers out looking at houses right now than there was a year ago.
Yeah.
And so the demand is extremely high.
Well, the big problem we had, we've talked about it in the past shows, is that the inventory was scooped up in October and November. Mm-hmm. September, October, November were 3 really big months. I'm not sure what December is going to bring, because it's certainly slowed down a lot there, but the inventory is still low, and that's going to be the critical issue probably going into 2020.
Well, and we have mixed predictions on that.
Yeah, we do.
I have 2 or 3 more people that called me just today to list their house in January.
In January.
And those were people that were not planning on moving. And again, I think it has to do with the interest rates, but I just have a feeling there's going to be a lot more inventory. We're going to have a lot more choices the first quarter, plus the fires, right? People are a little bit worried about fires, so they want to sell their house in January, February, and March. Well,
we dropped below 1,000 listings, available listings in Jackson County, 3 months ago.
Yeah, that doesn't happen very often.
And boy, when you get below 1,000, it's really slim pickings in a lot of areas. Now, the luxury market is a whole different story.
Yes.
But if you're looking down into that 250, 350, 350 to 5 range, boy, it's slim pickings. But on the other hand, if you list right now, what a great opportunity, because so many buyers are looking. There's not a lot of competition as there will be, and you say, when it comes in March.
Right, and it might actually come in January. We'll have to see.
All right, well, we're going to figure out Guy Giles is going to have all the answers for us. I know that.
We're so lucky to have him.
We're going to stand by. He's our resident mortgage interest expert, Guy Giles, Mutual Omaha Mortgage. Hey, the Real Estate Show starts next right here on KCMX. Okay. You ready to go? Guy Giles, you ready to go?
Yeah.
Greg, you ready to go?
Have your opinions?
All right.
Yeah,
Have your facts?
I think everybody...
Have your stories?
You guys are together there a little bit there, so we can see you.
I'm going to blow something up on this Christmas thing.
Get a little closer, okay. On the Christmas thing.
My wife has like a rule. I have like so close I could be to a blonde.
Oh, God, okay, all right.
I'm not actually a blonde.
She has other rules for brunettes, man.
Yeah.
Okay, segment 2, 13:30 begins on video, begins in 3, 2, 1. And welcome to the Real Estate Show on KCMX News Media 880 and on YouTube at realestateshoworegon.com. I'm Pete Belcastro. This is Alice Lema. We're both real estate brokers with John L. Scott in Southern Oregon. We get together with you once a week here on the radio and on YouTube to talk about our favorite topic around, and that's real estate in Southern Oregon. And Happy New Year to you, Alice, as we go along.
Happy New Year to you, too.
Goodness, 2020 is here. I didn't think we'd ever see 2020.
It seems so long ago, so far away.
Wow, people have been bringing up about Y2K. Remember the year 2000? somehow there's some parallels are coming along with that. I don't know why, but it's 20
The
years
day,
ago.
yeah, when we have a turnover on the year
The
clock.
the world almost was coming to an end.
Our digital science is much better this time than it was at the turn of the century.
Yeah, we're better prepared for it, aren't we?
Better prepared, no worries.
Anyway, today here on the Real Estate Show, Guy Giles has joined us. He's from Mutual of Omaha Mortgage, and he's our expert guy in mortgages. And well, first of all, Merry Christmas, Happy New Year to you, Guy.
Hey, same to you guys. I can't believe, we are about a week away, and all of a
Yeah.
sudden the first of the year will happen, and everybody will be going crazy again, just like last time.
It's kind of like the fall was a busy time. I mean, the fall was really busy. December's. Well,
I
what do you
think
think?
December is going to end up being pretty big.
You think it's
Yeah,
okay?
yeah, because we're here at the end and we're still frantically closing things, aren't you?
Yeah, I'm
Yeah.
gonna have, my little slowdown was a few weeks ago, and then now for the last couple of weeks it's been going really good, and then I kind of looked at the numbers, and we're actually going to have a really good funding month this month, which
For December.
yeah, I really wasn't anticipating that, to be honest. I've just been kind of plugging along.
Well, but that's really good news. Why do you think that is? I mean, something's driving something around here, and if you hear us, we think it's the low interest rates really being the big driver.
It is a huge part of it. I mean, there's a mental thing once you get up around that 5% where they were not that long ago, and I try to keep people focused on the fact that anything below a 6% rate historically is a great rate. And I mean, where are you going to go? I was thinking about selling an investment property that I have, and I was thinking, it's good to probably keep it because you have all of that money appreciating, and at some point, I'm already going to be hit with the capital gains piece of it.
Mm-hmm.
And I don't know, I've just done a lot of crazy things with money in my life, and real estate is one of those things that I've never looked back and made a mistake, even owning property all the way through this, the crash of '09.
Well, you sound like Alice. She owns properties also. You guys invest properties, and it's a way to create wealth for yourself, right?
Yeah, and if you're going to sell, then you want to sell with a purpose and a mission in mind, and you want to talk to somebody like Guy Giles and find out what it's going to look like and if it's even worth it. And that goes for refinancing too.
Yeah, and I mean, it's, and I hate to just like back and forth, but it's the same thing with a real estate agent. I have a lot of people that come to me and say, hey, I just want to talk to the guy selling the house, and why not have somebody that's working just for you? No matter what, those commissions are going to get paid, and you might as well have someone that's on your side rather than their first obligation is always to the seller on that point. But I don't know, the thing just keeps going. I kept hearing news last year that this next year would slow down, and I really don't think so. I think we'll probably have a ton of volatility toward the end of it. Getting close to the election, people will get a little paralyzed because uncertainty is what is what just I don't know. People don't like it.
Emotion, yeah, people get worried and all that emotion.
Well, it's going to be a big thing. Election's going to have an impact on everything probably. I don't think it's going to have much of an effect. I don't think interest rates are going to go down during this year. I think they're going to stay probably where they are, not drop a little bit.
If they did anything, they would drop a little bit. But at this point,
they're so low. How can they do that?
It just depends where people are investing money. There's a lot of people that think that this stock market that we have is pretty overbought right now, and at some point it has to correct. But things just keep happening. The tax cuts for the small business, whether you like Trump or hate Trump, it did a lot for this economy, and it's going to have legs for a while. And we're on Tuesday, Monday, another high for the stock market. It should be a pretty light week,
Yeah, it should be quiet
this week
too,
as
and
far
it's
as
not.
trading.
Yeah.
But yeah, it's just it just keeps going bananas, and I really think for the foreseeable future, our area is just desirable, and no matter what, people are trying to get out of other places, whether it's Colorado. The ones I see, I don't know about you guys, but it's kind of California, Idaho, and over in Colorado.
They're coming this way, you mean? Or,
Yeah, and I think it's more of a coincidence from the Idaho people because a lot of people like it over there. But I don't know. I mean, as far as like my forecast for the rates is they will be good, throughout this next year.
Well, we just did a deal with Guy. Actually, we closed last week, and one of the things about it was one of those we've sit here and told you so many times that these were renters, okay? They've been renting, and this was their first purchase of a home, and they got it, through the magic of getting this whole thing done. They actually ended up paying less in mortgage, insurance, and property taxes than they were paying rent.
Mm-hmm.
And it was
Isn't
one of the
that
coolest.
interesting?
And I told them, this is one of the coolest things I've ever seen, because we talked about this and people being able to do that. And here was a couple that actually bought the home and got it and are paying less than what they were paying in rent. And they got an interest rate of like 3.85%. It was well under 4%.
That's great. It's like free money.
How great is that?
Yeah. And it makes it possible for people to buy a house that couldn't normally buy one.
Yeah, and the first thing I told them was also, you started to create wealth for yourself. And that's how, by using real estate and property, that's how you get started. And I was so happy for them. And they're going to be on their way, they're in their 20s, so it's a long way from us, but they got a great future ahead of them by getting the first house, right? That's what we talk about all the time here.
That's the fun ones, and I have some mutual clients with you that were in there with me this morning. That same thing, he's paying about $1,550 for rent right now. And
Yeah.
when he buys his house, he's going to be lower than that. And even if you have to go up a tiny bit, as long as it fits within your budget, it's not the end of the world, because the rents will catch up to that, and you might as well get in the game if it makes sense. But definitely when you can lower it right off the bat, and you have that asset appreciating instead of appreciating for somebody else.
What a great deal.
Yeah, you're buying yourself a house, not having you buy the landlord a house.
Well, yeah, and the only thing that sucks worse than mowing the lawn is mowing someone else's lawn.
Well, even in a flat market, which is kind of what we're in, we're just at the beginning of stabilizing that 3%, 4%, 5% appreciation, which is considered flat. You're still doing a little bit of appreciation every year. And after 10 or 20 years, that's quite a bit.
And that's another thing that looks like it's going to happen as far as this mortgage interest. They're going to take that $10,000 cap and change that to $20,000.
Oh, you're talking about the $10,000 cap on what you would pay for property tax. Was part of the tax thing
Yeah.
from 2 years ago.
Explain that, 'cause
Yeah.
not everybody knows what that is.
Basically, if you pay more than $10,000 in property taxes, which sounds like a lot,
In a year?
yes, but if you own a couple of houses, you can go over that, or if you have a house down in San Francisco or someplace. I think there was one guy that was coming to town today, or he actually was looking at property this morning, a chef. His property taxes were $42,000 on his house that he's looking at here.
Here in the valley?
Yeah, here in the
42,000.
Yeah, it's
Well, you got one big house at $42,000 in property taxes. Yeah.
yeah, no doubt. I can't think of the street name it was on since I'm not on that side, but anyway, anything over $10,000 that you're paying in interest
It's deductible, but
for taxes.
over $10,000 is
Yes.
no longer deductible. Remember that?
And
Yeah.
so you were capped, but it looks like for 2020 that will get changed. I mean, it's a little bit too late, I think, for them to do anything about it this year, but it looks like for next
So
year.
Congress would have to change that.
That
And I wonder if they'll be able to do that. That'll be interesting, because that really to me, I believe that had an effect on the luxury market.
absolutely.
Because, I mean, if you had second, third homes and you could deduct all of the tax,
Well,
all of a sudden you're down to $10,000. Why do I want that? And I think people sold them. I think that's part of the reason that we've had such a massive amount of luxury homes on the market.
That's definitely. I mean, it's a factor, because you're looking at everything when you're doing it. And then if you're somebody that has a couple of rentals, 3 or 4 rentals, you can get over that really fast. So, you might sell a rental, or all of a sudden it just doesn't pencil out as well. So, I mean, I guess that could be good for the first-time home buyers potentially, but it all factors into our market. But I think it's going to be a good year again. I mean, I'm not seeing anything at this point pointing towards
The big clouds.
right.
Out there.
Right.
No, I don't either.
It will get weird right around the election time. There is no doubt about that.
Well, it's kind of weird already in some neighborhoods. There's a lot of fear. Some people are buying houses based on what they are worried about the election happening. Some people are selling houses based on what they're afraid of the election might happen.
I started 4 years. People were saying the same thing. If so and so wins, I'm moving to Canada.
But
So and so wins, I'm moving over here. And it's just all part
Right.
of
You
part
have to
of the
look
thing.
at your life, and you have to look at your money and see what makes sense for you, and try not to worry too much about.
I try to tune
what's
that
going on with-
stuff
right,
out.
with
I really do.
politics.
I kind of tune it out and kind of just go along. Try to do your own thing.
Yeah,
your
and do
own.
what's best for you and
Just
your
try
family.
to. Yeah.
I mean, I do really believe that it probably affects the stock market a little bit more, just because when you have big changes like that, that's when the corporations, that affects them as far as having one party that's really in charge. As long as we have gridlock like we have right now, it's always good to do.
You heard it here, folks.
Sometimes that's true. I mean, I think the Oregon legislature, the fate with Sal Escobar before Sal left and retired, and he was there for what, 14 years, I think, in Salem. The best year he thought they had when they were deadlocked at 30-30 in the House. They had to get along.
Right.
And that was the best year he thought that he had there. I remember him telling me that as well.
And then the stuff that has to happen for you to get reelected does. You know, they got this NAFTA thing renegotiated.
Well, there's a lot happening. That's what I'm saying. I think the economy here, we saw the did you see the Chamber of Commerce this week welcome their first cannabis business into the Valley as a member and maybe beginning to embrace that industry as a potential for jobs and creating economic growth in our own valley. That was a big,
And
that was big.
And that is huge, because I don't know if you remember, not that many years ago, cannabis was really not welcome. I had people calling me to do purchases of cannabis land because they had been turned down by other agents. They had been cussed at.
They didn't want
They
to
hung up the
do it.
phone.
Yeah.
It's before it was legal.
Yeah.
People were trying. The early adopters were trying to get in and do that. So it's definitely much more accepted, and that's a good thing because it'll create jobs.
It creates jobs. It brings money in, and people can
stability,
stay here.
and
We're
then
talking
people can buy houses.
and all that kind of thing. It all kind of ties together, doesn't it? And it's really true. Because without that, we don't have much. And I think as long as our economy continues, geez, we've got a good thing going on. As you say, in November, right? You said openings were up 4%.
4% just in
Just in
November,
opening.
and prices are kind of flat. So
Yeah.
if prices are going to be flat, but we still have more demand, what's going to happen next year?
Yeah, well, I
That's the
think, as
question.
we say, we're going to find out as the stats come out, and I think you're right. I think it's going to be a good year, and it's going to be a solid year right from the beginning. The biggest issues being, again, is the number of listings. How are people going to sell? They're going to stay. Remember, people are staying in their homes longer.
A lot longer.
Than they ever were.
Yeah, it's like double now.
Well, it was 9.8% of Americans relocated the previous 10 years.
Only
9.8% of Americans relocated the previous 10 years. That's the lowest level since 1947.
Wow.
1947.
That's after World War II.
Yeah.
So what's happened? Why are we staying in our home longer? For many, many reasons. We can work in our homes. Interest rates are low. I can't find replacement properties. All those things, I think, play a role there.
That's crazy. That's about as far as the unemployment rate. That's about when it was down.
Oh, that's an interesting relation. Yeah, that's very interesting.
So we're staying in our homes longer for many, many reasons. And we've got a break coming up here. We're with Guy Giles from Mutual of Omaha Mortgage today on the Real Estate Show. We're talking mortgage interest rates and what to expect in 2020. We got a lot more to go. We're coming right back after this.
So the conforming loan limits and the
We're going to talk about those. Yep.
both went up.
Yep.
Will be going up at the beginning of the year.
Can you say a little bit about what that means exactly, or what a conforming loan limit is?
Yes. For you, not for him.
I was gonna say for me, because I don't know. I don't know what you're talking about most of the time, Guy.
God, it's 510. Let me Google this thing real quick. It's
right.
The FHA is 430. God, that note I didn't make it out the door with. Do you have a pen?
Is that a credit score?
No.
430?
I know the conforming loan limits with the 510, but FHA's went up. Great, all my stuff is like right there, and that's the hard part about talking about anything with the markets and all that, because it can completely change before Friday.
Nobody hold it.
listens
I was
to
going to
the
hold
show.
it. They're not going to hold it against.
Well, according to our boss, 2 people do.
Yeah.
I know my mom passed
Jeff
away,
always
so I know
does
we
that.
lost
Oh, I'm
some
sorry.
ground. Oh, that was a little while back.
Okay.
That was half the audience.
Okay, you ready
So-
to go? You keep looking.
I think it's 320, like 3. Yeah, just give me one real quick
Okay.
second.
Is that the
New FHA loan limits.
All right, we're about set to go.
314, but they're a little bit more in Medford, but I won't worry about that.
Okay.
This will be Josephine County.
Okay.
Shut up.
So what is it currently?
For the FHA,
Yeah.
like 314. So I mean, it went, or no. Bear with me 1 second. Now you got me all jacked up, or I got me all jacked up. New FHA loan limits.
Here's a summary from Housing Wire.
Okay, it was 294. No, that was back then. Sorry, buddy. Just give me a second. I don't do well under pressure, man.
Yes, I can tell. I thought it was 424,000 in Medford.
So what does that mean exactly?
See, he's
Okay.
going to explain it. This is very important for your home buying future.
Yeah.
I had literally like with down payments, this is what you could buy. I mean, I had everything prepared today.
So it's actually an anti-market phenomena where FHA has a maximum they will allow a neighborhood to price at. It's an arbitrary, they go, oh, not completely arbitrary, they go out and they run numbers, right?
Right.
And,
Yeah.
you know, based on demographic income and blah, blah, blah. And then they say, well, you can't, we will only do a loan up to this price for this loan program. FHA is what a lot of us start at because your interest rate, your down
They
payment is
guarantee it, yeah.
lower.
Yeah.
They guarantee
Okay.
it.
All right. You ready?
But isn't that interesting? They
331.
put a
Okay.
cap on it.
Yeah.
Like, why do they do that?
Well, as
That's
far
not
as
free market.
Okay. You
Well-
guys just discuss that when we get. Okay. Let's go. And you can talk about that. Talk about it. Okay. Ready? Hold that thought.
well,
Ready?
yeah, but why? I mean, that's gonna be a difficult
You need to
one
talk
to
into that.
answer.
Well, then I
Okay.
want to ask it.
All right.
I don't want to ask you any hard questions.
Okay.
I
Oh.
don't mind most hard ones, but when you come up with an arbitrary number like this is the new limit,
Okay.
331,760. So they're just using
All right.
some kind of average house price, and
Yeah.
and that's where they're
You guys are
deriving this thing
confused.
from.
All right.
They're
Okay.
trying to keep the population under their thumb.
Okay. You ready to go?
Whitey's
It's
keeping
the
us
Okay.
down.
man. It's the man.
Okay, here we go. Section, God. Segment 3, 1330. Goes. 3, 2, 1. Welcome back to the Real Estate Show on KCMX News Media 880 and on YouTube at realestateshoworegon.com. Happy New Year to you all. Pete Belcastro and Alice Lema here with you today, along with Giles from Bank Mutual of Omaha Mortgage, I should say, who's been our resident mortgage expert for many years here on the show. And I'm telling you, as long as these rates stay the way they are, the mortgage people are pretty happy because you're kind of the center of attention right now.
So you're gonna not fire me from the show? if rates are low?
As long as those rates stay low, we'll keep you around because it's, to me, what it does, it just opens up so many possibilities for so many people
It
who would
helps,
otherwise
for
be
sure.
shut out, and that's why I'm excited about it. And I think what lies ahead, because we are getting more inventory, we're getting more different types of inventory around. Not a lot,
People
but
are
we're
more
getting.
comfortable selling because they know they can buy
Yeah.
something and still have a good payment.
Yeah. All right. So anyway, so if I come to you today, all right, I mean rates are what? Or
Well, it did.
the ranges,
It obviously,
okay?
yeah, I mean, it obviously comes down to FICO score. I think the lowest. I mean, we could be down in the really low threes for a VA loan right now.
Wow.
I mean,
Low threes.
I mean, if you were looking at a little bit in points and you had a good credit score, I could probably almost get you in the twos. So
Wow.
You're- on a VA loan.
on a VA loan now, we have had like 2 weeks of just this stock market just keeps going up no
Right.
matter what. New record highs. Christmas
And when
week.
it goes up, interest rates go down, right?
Yeah, so people are either investing in long-term things. You know, if they get a little bit scared about the economy, they'll invest in bonds or mortgage-backed securities, and mortgage-backed securities are what these trade on.
Okay.
Or if they think they can make a buck in the stock market.
So that's why it's going
So,
down. The rates
yeah.
go down as a result of that.
That's interesting.
I had a variable rate once of 2.75%. You know, but that was a variable rate too. But this is really exciting to me. It's really good.
Yeah, I mean, we're, the real rates are, up around 4. Some of the government, they have a lot of pricing that you can charge people in those things, and we're just a bank that really tries to do what we can for the veterans, and so we do have some really good VA rates. So
Well, I
your
guess.
going rate on those are going to be a little
Well, and
bit higher
veterans
than that.
don't have mortgage insurance.
Mortgage insurance.
They
Yeah,
don't,
which
and
is
that was
wonderful, or a down payment.
no, and then unless you go over the conforming loan limit. So if you go over the conforming loan limit, which that's something we'll talk about here in a minute, which is where Fannie Mae and Freddie Mac are allowed to purchase loans. So that's where the federal government just kind of sets a guide every year on how much you're allowed to borrow and do that. Otherwise, you're doing what's called a portfolio, where a Chase or a U.S. bank, somebody will have it in their own loans, and actually those could be lower than the conforming ones, which is rare also. So there's all kinds of weird stuff going on in the markets out there, but they have raised
Loan
the
magic.
conforming loan limits to
Yeah.
as of January to 510,000 in our area.
So when you say conforming loan limit, that means 510,000. I could get a back loan, but an FHA loan up to that amount.
Not an FHA. You
Not
can
an
get, you
FHA.
can get a Fannie Mae or a Freddie Mac. So no matter really who you go to do your loan with, if you come see me, if you go, down to your local bank, anybody, most of the credit unions, everybody will sell Fannie Mae and Freddie Mac products. These
Okay.
are government-sponsored entities that loan most of the money for mortgages. The government took them over after the crash. They were basically getting insolvent.
They were, bankrupt.
There's just a whole lot goes into all that. And there's talk about them coming out, but that is who's going to own your loan. Now, whether you write a check to Chase or U.S. Bank or whoever or me, they're going to 9 times out of 10.
Everybody
own
sells the loans. I mean, everybody sells the loans.
Yeah,
Don't care.
so that's why it's good for you to go and find somebody that's going to give you a decent rate, because at the end of the day, there's no guarantee that anybody will keep one. There's a lot of places that like to that like to make their money on servicing, but really it's if you can get an eighth or a quarter% better rate by coming to see me, that can shop around to about 30 places, it's going to save you $10,000, $15,000, $20,000, $50,000, just depending on your loan amount over the life of the loan.
Yeah.
And then you don't have to go try to refinance 2 years from now if rates drop a little bit.
Yeah, well, we'll see what happens
But
with
when
that.
your loan does get sold, your interest rate does not change.
They
Just
cannot
don't want
change,
anybody to
yeah.
worry about that.
No.
They can't change anything on that, and so and they also give you a grace period. So if anything was to go weird with the payment, you can't get hit with a 30-day late if something was to go wrong on that. But
Yeah.
I sold servicing for years, and we service a bunch of our things. If you really want us to service it, I can keep it. It's not a big deal, but it just gives me the ability to look around. And the guys that service all of their own stuff don't have that ability, because
They have to stay with
it's
who they have.
it's their own pricing. And you might have
Their own
somebody
products.
just giving away the farm on a given day, and you're still just, like I said, selling a Fannie Mae or a Freddie Mac product, and go for the best rate.
Yeah, that's true. Why does credit matter? We always talk about, credit scores, right? You got your credit score. We all got our credit scores. Why does credit matter? According to statistics, it's about default, about the ability to default. So if you have a credit score of 800 or higher, the odds of you defaulting on that loan to the lender are 1 out of 1,500. Okay, 1 out of 1,500. If you have a credit score of 620, then the odds of you defaulting on that loan are 1 out of 15.
Wow.
It's a huge drop. So it makes a
Couple
huge
zeros,
difference.
it's not a big-
It makes a huge difference in
It
the
makes-
rate, right?
Definitely for us, there are people that won't loan at that credit score at all, and in some respects you say who can blame them, but really it factors into the cost of the loan, as far as, are you going to pay any points or not pay any points. It factors in on your mortgage insurance, which is the biggest deal right now as far as that goes. If you have 5% down, I've seen people paying $20-$30 in mortgage insurance because they have a really good,
Which is not very much.
No,
That's
not
not
at all.
'cause sometimes you have to pay almost $200.
That
on
same thing, I've seen it $350, $360.
On
Oh
mortgage
my gosh,
insurance. Wow.
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 So it's getting to where it's really,
And that's a month.
Yeah, oh, absolutely. Until you get that thing paid down to where you're at 78% loan to value, you have to pay that thing the whole time.
And some lenders and some loans will notify you if you get close to that after 2 years or something like that, or 3 years, and some
Yeah,
don't.
and-
So if you're paying mortgage insurance, you might want to check and see where you're at with it, and maybe you could eliminate that if you have that equity in your house. So don't just let it sit there and pay it every month after month, year after
But your
year.
realtor can tell you too, because it's a comparable analysis of the neighborhood of
Yeah.
what your house is worth.
That's generally the first thing I do when somebody comes to me. I'll ask them for a mortgage statement so I can see really where they are. A lot of times people don't even remember. And the other thing is, I'll have them call their real estate agent that they used to put them on the
Fun.
spot a little. That's
That would put 'em on
always
the
fun
spot.
because hey, your house didn't appreciate at all. But definitely you want to do that before you go out and pay for an appraisal. So I try to do a little bit of legwork for people before we just throw a bunch of refinances in the pipeline.
So again, if you had a 720 score, that's really high score.
I think it is, yeah.
But it compared to the 800 score, the odds of default almost are half. I mean, it's so much more as you go down on the credit scores. So
And
anyway, that's always interesting, because credit scores are a big thing, and you want to make sure you know what you got when you're getting into this.
And just beyond the mortgage insurance, and by the way, when I say mortgage insurance, that's insurance that you get to pay to cover the bank. You don't pay, it doesn't cover you at all. It
No.
just covers the bank in case you default.
And that's in addition to
Yeah.
your house insurance. They're two
Yes.
separate things.
And
yeah.
and they've talked about making house insurance on your credit report also. So I mean, all these things factor in. I wish we didn't have 3 companies that have so much control over our lives with 300 factors that go into a FICO score. I mean, it's not cool, but it's where we live right now. But it is really, it affects a lot of your life. So it's definitely a good thing to have that credit score up. And we have pricing breaks at like 620, 640, 660, 680, 700. So these guys have done their homework on that also to know who's going to default and when they're going to default. So that's just on your regular loan pricing, and you get up over 740, you really should have about the best deal out there.
Around that 740. Okay.
On an interest rate.
Yes.
Yeah.
And on mortgage insurance, but it is pretty amazing that sometimes you'll just see that one bank that's really going after the person with the great credit score, and they'll be lower. All of a sudden, my Wells Fargo will be down.
So they'll lower kind of that mortgage insurance if you have a really high credit score then.
All day long now.
Really?
Yeah.
Okay.
Another
Well,
thing.
that's good. I mean,
Yeah, and another thing that we're doing now that wasn't attractive here, it was up north in Washington, and I was always jealous of those guys, is what's called lender paid mortgage insurance, where we just bake it right into the loan, and it might only be $2,000-$3,000. That would equate to maybe $12 a month instead of paying $60, $70, $80 a month
put it
for
into
the
the
mortgage
put it into
insurance.
the, put it into the loan.
Yeah.
Ah, interesting.
If you can have 20% down,
Yeah.
that's good. But at the rate houses are going up, if you try to wait to save that whole 20%, which I mean, it's great if you can, but if it takes you 2-3 years to do that, and then you just spent 3 years on a $300,000 house appreciating it, even when you say
Even
it's
if
kind of
it's
flat
only,
at 5%,
right, yeah.
That's $45,000.
And then you don't get in.
Right.
Mm-hmm.
Right.
Yeah.
So now all of a sudden you're like, yeah, I got my 20%, but it's 20% of what?
Yeah.
So that's 15% less house by the time you save that, if it took you a couple of
So
years.
I have a question about the new mortgage limits that you were talking about, the conforming limits, and how does that work if people want to help their adult children, if they want to do multi-generational purchase?
Well,
More than one person on the loan, like more like 3 or 4.
yeah, Freddie Mac has a really good non-owner occupying co-borrower. I mean, there are programs where you can co-sign on some of the government stuff, or just be a non-owner, co-borrower.
Because that's a way to get around having the 20%, or to actually get the 20%, have more people.
Yeah,
involved.
now everybody will accept gift money, by the way.
Everybody accepts gift money,
Yeah,
right? So mom and dad,
Mhm.
friends,
and
any amount?
yeah,
Pretty much,
yeah.
okay.
It used to have some rules on it.
There's
Those
no
went away a
limits.
few years
Okay,
ago, as far as that goes. Whether you had up to 20%, how you'd have to source it and all that. But if we go straight, anyway, I can show you a couple ways where we don't have to, mom and dad don't have to show their hand to their kid as far as what they're actually worth, because there's been
Do
apprehension.
people get a lot of gifts? Do you get a lot of gifts from in loans and stuff like that from people?
I do. I mean, people are.
So it
are
happens
Yeah,
a lot.
I do too.
It happens a lot. Then
yeah.
you're saying, okay.
People are reluctant to ask for it, but at the end of the day, I just say, hey, if your kid, if you were going to help your kid, would you do it? And it's like, yeah, but there's really no logic. They kind of think like, I don't want to ask my parents. I had a doctor one time, so I just got out of med school, and I'm a doctor asking my parents for help with the down payment, and I'm just like, they probably spent a lot getting you where you are right now. A, they wouldn't care a little bit more to help out with that, and
yeah.
B, wouldn't you do that for your kids? And he said, yeah, I would all day long. And I was like, well, just
Same
talk
thing,
to him,
isn't
and they
it?
were more than happy to help him. And if you can get into a conventional loan rather than an FHA loan, because you can get a little bit in gift funds and get you to that 5% rather than the 3.5%, it's something that's good all day long.
It's well worth it,
As
isn't
long
it,
as
to
you have a
do
good
that?
credit score.
You gotta, bottom line, you gotta have a good credit score.
Well, everybody on the contract has to, if you're gonna do one of these group purchases, if you're just gifting money, then you're not on the contract. But if you're actually gonna buy something with your adult kid or your elderly, whatever, everybody gets checked.
Yep.
And we-
And I don't know if we're at
well,
time,
we're on,
so we could explain
but
a little
what's
bit
our,
about FICO.
but what's our motto? We don't want to buy with our children, right? Isn't that kind of thing? We want them
So
to.
if you don't have,
We don't want to sign with. We don't want
I
to do
do.
those things. Oh, I know you do, and
My
just
kids are great business people.
see but you may be the only one where that's true, because so many
No.
times you've seen it just go the other way and hear horror stories
Oh my
about
gosh.
that. So you just got to be careful of what you do.
I
just
turned
be
the guy
careful.
down once because he co-signed for a vacuum for his buddy. So,
Really,
yeah.
that's extreme. I
another
have to
story
say
for
that.
another day.
Another day. We got
Well,
a
that's
break.
friends. We don't want to co-sign for friends.
We got a break coming up here on the Real Estate Show. One more segment to go. We're talking mortgage interest rates. Well, we're learning a lot today about different loans, different things that you got to be prepared for. The biggest thing, you got to have a good credit score. Work on that. We've got a break coming up. We're coming right back after this.
Yeah, my daughter asked me about that one time. She's like, I'm thinking about buying a car, and she didn't. She's still driving the car that I bought her. She's in the middle of her second CPA test right now, and I was like, honey, what's your score? She's like 780. I was like, why do you think me co-signing for you is going to help you at all?
What'd you say?
And well, it made sense. I mean, she didn't need it. What'd you lose?
The cap
Okay.
to my. That's right. I'll find it later. So.
Okay, you ready to
Take
go?
your shoes off and walk around. You'll find it.
Okay, there you go.
This one's short, right?
Yeah. All right, 9 minutes. Final segment goes in 3, 2, 1. Welcome back to the Real Estate Show on KCMX News Media 880 and on YouTube at realestateshoworegon.com. Welcome back, Pete Belcastro, Alice Lema with you here today. We'll be back, of course, 2020, New Year starting up with some terrific shows with great guests. And one of the best things about it changes from year to year, and all the different topics that are out there. But one of the things that stays pretty constant is that real estate is a driving force in our valley, and lots of people involved. There's a lot to it. It takes teamwork to make a transaction come through, and that's kind of what we're all about, hoping that you'll be a smart real estate consumer, especially if you're in the mood in 2020.
And the
I think a
interest
lot of
rates-
people are.
Yeah, and the interest rates are not gonna be low forever, and we still have kind of flat prices. So how often in our lifetime have we seen that combination of low interest rates and flat prices? And you
Everybody
should-
talks about the good old days. These are them.
These are them right now. Run, don't walk. Buy
And-
another house.
And we're going to be hearing, here we're all, the new year is coming up, we're going to find out what Jackson County's overall valuation went up, and what percentage it went up overall in the county. I'm saying around 5%. That's my prediction.
I would agree with that.
4.5 to 5% probably.
5.1.
5.1.
Yeah.
I don't think it's going to be in the double digits as it was, So all in all, it's a very healthy market. But again, we have two markets. We have the market, the 500,000 and above markets, and we got the 500,000 and below markets. One's a buyer's market in the luxury market. The other one is still a seller's market in the lower ends, right?
Well, see, I think it's
Somewhat.
flattening.
Flattening.
And if you are selling, really listen to your agent, look at the comps, and it's not the kind of market where you can just overprice it by $10,000 or $20,000 in May and hope that it's going to sell, because I just don't see that happening this year.
I've had two appraisals in December that both came in low.
Yeah, it's starting to happen
Oh,
again. Last
two.
90 days. Yeah. In fact,
What's going on with? I've never had that. I've never
I
had
haven't
that
had a
happen.
low appraisal in years, and
But we
What?
just had
We
one.
just had
all of a
two.
sudden, yeah,
Yeah, oh, I
I
was
know
gonna
what
say.
you mean. It's a little bit crazy, but she's right. Everybody just kept thinking, I'll get whatever I want to ask for the property, and so then all of a sudden you see price reductions, or somebody just goes in and makes an offer on that, but that still doesn't necessarily mean that the comparable properties are there for the appraiser to do that. So, really, you just want a good, fair price for your buyer.
Well, and you
It's
want to get
not-
on with your life too, right? So
Yes.
if you have to sell that asset and you're, waiting around because you overpriced it by even as little as $15,000, you're missing out on the good deals coming down the pipe.
And that's another reason to have a good real estate agent, because I've had so many people say, well, they just came down $20,000. Of course they'll take 20,000.
20,000 more.
Yeah, don't do that either.
Hey,
Yeah, no,
they just feel that they lost 20 grand in their mind.
Yeah.
That doesn't mean that they're gonna automatically do that. But I have seen a few price reductions, and like I said, it's still appreciating, as far as I know, but just not as fast. And when people go in over where it really should be priced to begin with, hoping for the best, and then you get
Yeah.
a price reduction, it doesn't mean that.
I told people, look, I didn't get as much when I sold my house as I wanted to.
Mm-hmm.
My son didn't get as much as he wanted to. You didn't get as much as you wanted to when you sold one of your places, I know. So you gotta take those with a grain of salt, because sometimes it's not going to
If
happen.
you really want to
Yeah.
get on with your life, yes.
Yeah, and not have something hanging over you, for
Yeah.
sure.
Yeah, and you know, you
want
go
that.
into Safeway or one of those grocery stores, you don't offer 5 cents for a loaf of bread if it's priced at $2.19. It's not that kind of a deal.
I actually,
That's a good comparison.
You know?
I got in trouble with my family right in the middle of the recession for telling my dentist that he needed to give me a discount, and they're like, "You can't." I was like, "Why not?" You know, we all took a pay cut.
Oh, I
during
did
this
that
thing.
too. Yeah,
Yeah,
I
right.
got deals on everything.
Heck yeah, why not?
It's the recession.
All right.
It was the recession, but it's not anymore.
No, we're not, and our market is healthy, and things are going well. Okay, so we're going to look at 2020 ahead. So we had a great 2019. We all agree with that?
Yeah.
We're here a year ago. We were saying interest rates were going to, hopefully they were going to come down, which they did, which spurred on, I think, a great year. I think Jackson County is going to have almost $4 billion in sales. So, I mean, that part is pretty healthy, and I'm really glad about that.
And
So,
this time last year, we were wondering what was going to happen with the hemp industry. Remember?
Right,
We were all
yeah.
so curious.
Yeah.
So we've got another year under our belt.
how do you and how would you describe what happened with it? I mean, it was some people made a lot of money, and a whole lot of people lost a lot.
I think that
Right.
that is just what it's like in a brand new industry. I think that is part of the experimental stage, and the people that were successful are going to do it again. The people that were not successful learned from it.
Yeah, and you think they're going to come back?
Yes, I think they're coming back in force, and I
You
think
do?
Southern Oregon. This is one of my predictions. Southern Oregon
Okay.
has been identified as one of the gems for the hemp crop. That we have some of the best product here,
Yeah.
and that's going to continue, and it's going to get more organized. We're going to have some places to actually dry and process, and then hopefully we'll have some new product manufacturing is what I'm hoping.
Okay.
Here in our valley.
And
We're all
Alice,
looking for
I'm
some
hoping
different
you
things.
are. I'm hoping you're right. He sees it a little bit
Oh
differently.
dear,
though.
go for it.
Okay,
Well,
but
my allergies have been terrible. This
Oh.
is like the worst year for allergies. I've had people that have been diagnosed with asthma. I've had my buddies that are doctors have had tons of people coming in with respiratory issues.
is this
My friends at
because
the
of
hospital.
hemp of the?
It's either that or just the craziest coincidence
Okay.
in the world.
Oh, okay.
And so we're told that it cleans out the soils, but what could it possibly clean out from these old orchards? There is arsenic and lead in those, and if these plants are actually cleaning out the soils, unless they can magically get rid of them, I don't know if people are ingesting these into their bodies. And even if they are testing their soils, they're testing them for pesticides these days, not for ones that they used 100 years ago.
Oh.
So let's just say there's too much unknown for me to get super excited about this thing unless somebody actually does some testing on it.
And you're right, and that's, we could show some time with the OSU Extension Service, because Oregon State University has their Hemp Institute thing that they're doing. So there's a lot. Jury's still out, maybe on
Well,
it. You think? I mean, for you,
it's
jury's still
because-
out.
Well, I've talked to them too, by
Yeah,
the way, so
it's all right.
we can bring them in. But yeah, as far as that goes, I've never been against hemp in my life. But I think
It's
about
how
the
it's
World
done.
War.
It's how it's done.
I think about the World War II vet that worked all his life, and now he can't sit in his backyard because he just had a giant grow go right next to him.
I've heard that a
That's
lot.
my
I've
issue.
heard that from people too. I know you have, and that's an issue. Maybe that's why they have the big
Didn't mean to
fancy
go on a negative
indoor
note,
grow.
but
Yeah. Anyway.
That's what it's all about. It's
But
all
we're
part
gonna
of
see,
Southern
right,
Oregon,
we're
right?
gonna see how it goes. It's not played out yet. It's not played out yet. This year was just kind of a crazy year, and I'm looking
Yeah.
forward to seeing, as you are, what happens in year number 3 of hemp.
Yeah,
the
and
third year
the hemp
now.
growers were not purchasing land the
No.
way the cannabis people were, so we're still kind of waiting around to see what happens with that.
And we're watching how people are taking care of their land, as you say, the waste
or
of
not.
the waste that has resulted from the hemp
And the
grow.
cannabis
So,
growers grow it a whole lot cleaner than
Totally different.
whatever's going on
Totally
with all
different.
these thousands of acres of plastic. I'll leave it at that.
Yeah.
But your house went up in value while we did this shit.
But we're looking
A little
forward. We had an amazing 2019, and we want to thank you all for joining us over the year for it. It was really we couldn't ask for a better real estate year, and we're looking forward again, I think, to 2020, and I think it's going to be another good year. So
And I think we're
a
out
lot
of
of.
danger finally too, don't you? The crash is over, the recovery is over, and we're back to normal.
I'm usually the pessimist, but I don't see any of those pessimistic signs as much out there. They don't seem to be.
So what's your prediction?
I think we're going to have low interest rates for the year. It's an election year. I think we're going to have another good, solid year all the way around. I think rural properties are coming back. I think we're settling in with the hemp and the cannabis world in rurals, and we're still a desirable place. Like Guy says, people want to come here because it's a great place to live. So, Inventory is going to be the biggest challenge in getting enough out there. Find replacement properties for people if you want to move here in the valley. That's our problem. We got 40% of the sales come in from outside people move here,
Which is high.
which is a lot.
A lot.
60% go up and down in our own market. That's the problem. They can't find replacement property. Whether you go up in scale or you want to downsize, the replacement properties aren't there, and that's what's going to be the holdup, I think, in 2020. All right?
We'll wait and see.
We'll see. I don't know. Guy Giles. You can always Google Guy Giles, Mutual Omaha Mortgage. He'd love to help you out, as he does a lot of people. And thank you for all that you do there as well. That'll do it for the Real Estate Show today. Thank you for joining us. Happy New Year to you all. We'll be back in 2020. What a weird thing to say, huh? Have a great week, everybody, and God bless you all.